everyone, I am Terry Fenelon.
And I'm Lloyd O'Dell.
And we are Terry, Lloyd, and Company. Now we are here today to talk with one of our go-to mortgage brokers. This is Jennifer Coppola.
Yes, so if you are in the market getting a mortgage, thinking about how do you get a lower rate, thinking about maybe an adjustable rate mortgage, stay tuned for all the details.
Jennifer, thank you so much for joining us today.
Thank you for having me. I appreciate it.
Now, if you wouldn't mind telling our audience a little bit about yourself.
Sure. I've been a mortgage broker for 26 years. It's been in the industry a very long time. A lot of experience for our clients.
You've seen a lot of different markets.
I have seen a lot of different markets. They've all been exciting.
They have, and that's why we wanted to bring you on, because we're hearing a lot about adjustable rate mortgages.
Yes.
Also referred to as ARMs. And they become very popular once again. They were popular prior to the recession, and we're seeing them again. And so what is an ARM, and why could a buyer think it's beneficial?
Well, anytime we have the industry with rising interest rates, we're looking for a product that the companies, the customers can find that will benefit them, and usually that's just a lower rate for a lower payment. The adjustable rate mortgages in history have been that product. They have usually been about a percentage point lower, and it's very attractive to a customer. And that product is, again, the term adjustable, which means it's fixed for a certain period of time, and then it starts adjusting on you, gives you time to get into that next level that you're looking for.
So a buyer's interested in it because they have a lower rate.
Correct.
So obviously they'll have a lower payment.
Lower payment, correct.
Okay. However, the term is shorter.
That's right.
So adjustable rates could be all different types of terms, correct?
They can. So one, for example, is a 5-year ARM. It's going to be fixed for 5 years, but then it'll adjust every 6 months.
So which is a lot different than the products we saw years ago.
Yes, it's a lot different.
So I think this is a key.
Longer terms and longer adjustment periods.
Right. So here, the lock-in is dramatically shorter than what it once was.
Correct, and that you're also seeing there's not really a big difference between the adjustable rate product and a fixed product. You're only seeing about 1/8 to 1/4% of a benefit. And over the long term, that's pretty risky for that length.
Right, because again, prior to the recession that we had, that difference was quite a bit. Was larger between a fixed.
You can see a full percentage point difference.
So now, even though ARM may sound like a good idea, there's a lot more risk than it used to be.
That's correct. There's a lot more risk. So that is my job with the clients is full education.
Right.
So when they come in and they're looking for that product and that payment and that goal, it's about education. They need to know what they're getting into.
So is there a type of buyer group or situation that ARM would be a benefit?
Yes. Investors or anybody that is looking for a property for short term, because they know that they're going to get in at that lower amount, that lower rate, lower payment for that time period that fits their needs. For someone coming in with, this is my family home, this is my dream home, I'm going to be here for a long period of time, that's pretty risky.
How are buyers today? How are you structuring the loans that you're doing with the buyers right now?
Right now, really, I'm actually just calling them acquisition loans. We are getting the buyers in however they can get in. We're working with daily changes in interest rates and market conditions. We're just getting them in the best that we can. And once the government, I say we, but once the government has fought inflation and we are coming into that recession time period and the rates come down, that's when we'll re-educate those clients and say, let's find the program and product that best suits your needs. Because right now, they may come in and say that they want a 15-year, but that interest rate isn't drastically lower than a 30-year fixed rate. So we put them in a 30-year fixed rate. Or they might say, I want an adjustable rate because I need that lower rate and that lower payment for now. It might not be the time. Right now, I'm sure you guys can explain this better than I can, that it's hard to obtain a home for a buyer. We're just getting them in the best that we can. We'll structure it later.
Makes sense.
Acquisition loans.
Acquisition.
Thank you again, Jennifer, for being here. We appreciate all the information. Buyers have lots of different options in getting a mortgage, and sometimes what appears to be the best deal may not be the best deal for the long term. So it's important to talk to trusted advisors like Jennifer. So if they wanted to reach out to you for more information, what's the best way they can get a hold of you?
Phone number is best, 248-310-9347. I'm available. It's all about education. We need to make sure they're in the right product.
Perfect.
Thank you so much, and thank you for joining us. Hope you have a great day.